The earnings front today, Randgold Resources says third quarter production up 19%, that to 234,000 ounces. Randgold says cash costs fell by 17%, that to $662 per ounce. The company says its strategy to cut costs and boost gold production to cope with a slump in the gold price is working. So let's get into all of this. Joining us from the London Stock Exchange is Mark Bristow, the CEO of Randgold. Mark, thanks for joining us today. So looking at the quarterly performance, quarter on quarter, you had an increase there of 80% in your profits, but looking at that year-on-year performance, so down 20%. So which is more important for us when we're looking at the health of your overall mining group?
I think, Samantha, good afternoon, and sure, you've captured it all very neatly. I think that just to add to your summary is, if you look at the cost quarter on quarter this time last year, also down, and that's the big driver, and really what you saw today was us delivering on our guidance that we set earlier in the year, and that is to continue to deliver better and better grades, which would naturally bring down the cost per ounce. Of course, when you mine the same amount of tons and you produce more gold, you make bigger margins, lower costs, and better profits. And I think the real takeaway today is that we've got through our peak funding in quarter three without drawing on our revolving credit facility, which really underpins the profitability of our business relative to the rest of the industry.
But of course, you know, everyone's watching this gold price, and certainly you would be as well. We're seeing it react right now to the stronger than expected US GDP figures. What expectations do you have for the gold price going forward? I mean, what are you pinning your overall forecast to when it comes to gold?
Yeah, I think, Samantha, you guys watch it very differently to us. I think to put it in perspective, 2002 it was $300. Today it's $1,300, significantly above when most of our projects were set. You know, we're still very profitable at $1,300 gold. We allocate our capital and have done for the last 3 years at $1,000 long-term gold price. So, you know, as far as profitability goes, it's demonstrated by this quarter's results in that we were able to fund the largest capital spend we've had in our history during the quarter. On the gold price itself, I think I would agree with you. Short term, there's a sentiment-driven view that gold price is probably more likely to go down than to go up. But in the medium to long term, the fundamentals are well aligned. And I think what we're seeing is the realization that the industry as it stands today is incapable of continuing to deliver the sort of volumes that it's delivering and make profits.
Yeah.
So it needs a big restructuring.
In light of that, I find it fascinating that a company like yourself is still focusing, still a strong emphasis on exploration. I mean, you talk about the geologists moving back into West Africa at the company after the rainy season. This, of course, seems to be at odds with the general turning in mining right now, where you're seeing a clamp down in spending. So why is that?
Well, I think, you know, that's where the industry gets it so wrong. You know, today's results are a product of the things we did in the past. And what we do today is what's going to set our future. And, you know, creating value in the mining industry is all about discovery and development.